Good morning, everyone. Oh, come on now. A little bit more energy than that. Good morning, everyone. See, hey, because there's like 7 of these things going on, right? This is the one. This is the one. So we're so glad that you all are here this morning. My name is Michael Martino, and I lead our banking inclusion and partnerships for Wells Fargo. And like I said, we've got a really, really good show for you all. And at the end, get all your questions because we're going to open it up, give you an opportunity to really kind of lean in and talk to them a little bit about what's on your hearts and minds and how you can take back the next version of what financial health is going to look like in the future. So with that, we're going to go ahead and get started. So, when we think about what's happening in the world today, finances are changing. They are transforming. And if you think about how that shows up for people in the world, whether that's a consumer, whether that's a small business owner, it's really about what are those things that are the next things in the future, right? And that's what we're going to talk about a little bit today. So if you think about how banking works today, right? So how many of you in here have a traditional bank account? How many of you have a digital relationship with a financial institution or fintech? See, so the lines are really starting to blur, and that's one of the things that we want to talk about. And how does that impact unbanked people? How does that impact underbanked people? And then partially banked people? So we've got some experts here that are going to walk us through that. So let's jump right on in. So we're going to start with some introductions. So I'm going to give you all a minute. And one of the things I want to know is, tell us about yourself, what you do, and since last week was Thanksgiving, what was the best thing you ate for Thanksgiving? So I'm going to start with Ray right here.
Good morning, everybody. My name is Raymond. I'm a financial literacy coach based in Los Angeles. And the best thing that I ate last week, I don't know if you've seen Teeny's mac and cheese, the viral mac and cheese before. Yeah, okay. So I was in Texas, and my cousin wanted to make Teeny's mac and cheese. So we made the mac and cheese together, and that was probably my favorite because, we got to hang out together, cook together. He's only 15, so I was like, you want to cook? Yeah.
My name is Taylor Nelms. I'm the Vice President of Research and Insights at the Financial Health Network, which is a national nonprofit that works with financial services providers, employers, and other stakeholders to promote consumer financial health and well-being for all. The best thing I ate for Thanksgiving, my mom came over, my parents came over, and my mom always makes a sweet potato casserole. We talked about this. She's from North Carolina, so she made sweet potato casserole, and that has been and will continue to be, I think, my favorite.
Perfect.
Hi, everyone. I'm Nadia Vanderwall. I work under Michael for Wells Fargo, and I lead some of our banking inclusion initiatives, including our partnership with Hope Inside to manage and have free financial coaching in all of our branches. The best thing I ate for Thanksgiving is this recorded because I have some very competitive coaches at my table. But I would say, assuming my secrets are safe with you guys, that it was probably my brother-in-law's pumpkin cheesecake. Pretty good.
Brother-in-law.
Yeah.
So is that the problem?
Not my husband.
Yeah.
There you go. That's what that's about. That's what that's about. All right, so we got the formalities out of the way. So let's talk a little bit about what's real, I think what people really want to, hear, and that is, let's talk about definitions and data and how important those two things are. So, Taylor, I'm going to start with you. And I said earlier that you have individuals out there that are banked, that are unbanked, underbanked, and how those lines are blurring. How should institutions and policymakers adapt these definitions and these strategies?
Yeah, thanks, Michael. So let me start with this. The Financial Health Network has really seen the evolution of what financial inclusion means, which is really what being unbanked, underbanked, partially banked is all about. We've seen that evolution firsthand. So more than 20 years ago, FHN was founded as an organization with a different name, the Center for Financial Services Innovation. And our focus, our rallying cry, was all about access. Over time, we have realized, as many others have realized, that access isn't the finish line. That just having a checking account isn't enough for someone to be financially secure, financially stable, financially thriving. And so over the past 20 years, we have evolved to become the financial health network and to really focus not just on access, but on outcomes, on ensuring that people are financially healthy, right? That they are able to meet their current financial needs and obligations, that they're able to meet their future financial needs and obligations, and that they're able to absorb and recover from unexpected shocks and plan for the future. We've also seen, as you were alluding to, that the ecosystem of financial services has evolved much more quickly than our definitions, our understanding of what it means to be unbanked or underbanked has been able to keep up. People today have really complex financial lives, and they're managing their money across a vast, diverse array of providers and platforms, obviously including financial institutions like Wells Fargo, but also including fintechs and retailers who often have their own apps, and employers and benefits providers and insurance companies and investment apps and crypto wallets and everything under the sun, right? And people are, managing payments and money and their personal finances and wealth building across all of those different systems. What it means to be financially included today has changed as a result. It's no longer about just having access to a particular product, like a checking account, or an institution that you have direct deposit with. It's about having the capacity and capability to navigate that complex, fragmented, and confusing landscape. And in doing so, to be able to use safe and affordable financial services in ways that actually promote financial health and well-being. So in our latest research partnership with Wells Fargo, thank you very much, we have really seen that these categories don't map cleanly onto people's financial lives anymore. So data from our FinHealth study, SPIND study, shows that more than 75% of US households use at least one non-bank financial service. And that's not just the traditional kind of alternative or fringe or predatory financial services like check cashing or payday loans. That's all of the services and platforms and providers that I was talking about, right? Like peer-to-peer payment apps and buy now, pay later and earned wage access and cash advance apps and subscription services, et cetera. These services are widely available, including to people who are unbanked. So strikingly, and this is the statistic that I think really launched the study that we're undertaking, we have found that 23% of consumers who report themselves to be unbanked, that is, they don't have a checking account, also respond yes to using an online neobank like Chime. Right? So for these consumers, I don't have a bank account simply doesn't align with how we define a bank account. Right? And so I think that this tells us two things. One, the ecosystem has diversified faster than our definitions and our measurement tools has been able to evolve. And two, inclusion is no longer this binary classification, if really it ever was, right? People participate in the financial system in many partial and hybrid and fluid ways, and people use these tools for lots of different reasons, right? Cost and convenience and speed and flexibility, sometimes because they distrust formal financial institutions. Sometimes they're simply ineligible for mainstream financial services, especially credit, or simply, the bank is not offering the feature that they need. So what we're doing right now is really trying to map that landscape to create better definitions for what it means, especially to be underbanked. What does it mean to use these different non-bank financial services, and what are the costs and risks involved in doing so?
That's really, really helpful. And Nadia, I want to pitch it to you now because you've got a unique experience. Nadia, you've worked for a Financial Health Network, and now you work for Wells Fargo running Hope and some of our banking inclusion work. How does that definition play out as you see it today from a banking perspective?
Yeah. Well, I think, so actually when I was at Financial Health Network, my boss there would always tell us what gets measured matters. And I've thought about that a lot moving forward in this work because we can't do anything if we're not first defining what we're trying to do and then setting our performance targets for it. And when I joined, the focus on unbanked versus underbanked proved challenging because no customer will describe themselves as being underbanked. They may answer some survey questions that eventually allow you to categorize them that way, but nobody's walking around the street thinking, I'm an underbanked person. And similarly, our lines of business, they're not out there developing strategies for, someone who's unbanked. That's just not the kinds of metrics we use. And so we had to move from this kind of zero-sum thinking of either you have access or you don't, to more of how are your needs being met? How do we define your financial health? How much savings do you have? What's your credit score? And I think there's a really good corollary in healthcare in a way where we don't assess somebody's health based on, do you have a chiropractor? Do you have a primary care physician? Instead, we look at if their needs are being met, what their vital signs are. And I think we've really shifted in banking to thinking about financial inclusion and financial health as the definitions that we're focused on are your needs being met in different ways. And we know we can't have zero-sum thinking. We know you're not either banking with a bank or you're with a fintech. We know you're doing both. And so how do we build our relationship and deepen it with you through this array of services and then measure how your financial confidence, your financial health is shifting accordingly.
Great, that's helpful. And I want to come back to you, Taylor. You gave me something to think about there for a second. And as you talked about, some of these other products that are coming, from buy now, pay later, early wage access, what are the risks in those for segmented communities?
Yeah, that's a great question. So, being underbanked, using a whole variety of non-bank financial services, especially when you don't necessarily have access to mainstream products and services, that gets significantly more complex when you look at the costs and risks associated with those services. And I think we have to look at not just what services people are using, but how they're using them, right? So, peer-to-peer payment apps, those are free and really widely used, right? Who doesn't use Venmo or PayPal or Cash App, right? But they can be risky if you store large balances on those apps that are not FDIC insured, right? EWA, earned wage access, similarly, cheap and free for many workers, but some varieties can be very costly for heavy users of those services. Buy now, pay later, often free for people who pay on time, right? On-time payers, and hugely popular, growing in popularity. But that product also carries real risks for consumers who may be stacking and juggling multiple loans, right? So it's not just about which products you're using, it's how you're using them. And to Nadia's point, what are the implications for how you're using those products for your financial health? So we think that institutions should be measuring financial health as a way to surface consumer needs and then use that data to tailor strategy, to drive product innovation, and to help personalize marketing and messaging. And that's because we think that financial health measurement is the optimal way, the best way, the most reliable way to differentiate opportunity from risk. Two BNPL users might look demographically identical, right? But one, as I was mentioning before, uses BNPL as a convenience and is mostly financially healthy, right? They can manage that use. Others might be coping or vulnerable and be using BNPL on a regular basis to bridge income gaps in ways that actually is detrimental to their financial health. So financial health, measuring financial health specifically makes the invisible visible, especially in markets like financial services where innovation is outpacing our understanding of outcomes.
Oh, that's really good. So let's move from the theoretical, from a data definition perspective, and let's talk about real world perspective, right? So Nadia, I want to come to you. What real world scenarios best illustrate how you're doing the work and how your lived experience is with unbanked individuals?
Yeah, I mean, not to deflect the question, but I almost want to turn it to Ray because in our work, in our Hope Inside work, again, we have underbanked, unbanked, low income, financially vulnerable, thin credit, however you want to sort of characterize somebody who is living on the edge of financial precarity, coming and seeking coaching. in our branches and getting sort of that help. And as I think about all these definitions and these real world experiences, again, a lot of people have bank accounts, but they are inundated with information and advertisements and fraudulent text messages. I mean, just this morning, my phone rang like 7 times with someone telling me to pay my highway tolls, even though I never drive on the highway. And how do we help people cut through the noise and get the financial advice that they need? And the people that I see doing that on the ground and having that shared lived experience with our unbanked and our underbanked clients best really is our Hope Inside coaches. And I don't know if you, I mean, I can give the example of the gig worker with, cash under their bed or storing money in PayPal or on their sports gambling account, but I would love to hear, Ray, kind of what you're seeing and how you're helping people too.
Good pivot.
I didn't know the answer.
I think that now what's happening more than ever is access is not the problem. Everybody has access. We all have multiple apps on our phones right now. We all know that we can download them for free. I think that now what's important is understanding truly how they work and how are they going to work for you as a person, as a business owner, or however you're managing your funds. We all in this room have a very unique way of approaching fintech and a way of banking ourselves, right? So when I'm meeting with clients, I think that the most important thing is really truly understanding the why behind systems. Not necessarily just knowing that you need to have strong credit and you need to understand how to run your business, but why are these systems in place? Nadia mentioned briefly that her boss before said that what's measured is what's important. And you carry that with you, right? So it's kind of the same thing that I'm doing with my clients is I'm teaching them what is the importance and why is it important for you to know this, for you to feel empowered by it, and how do you proceed moving forward. The systems are in place, they're available to us. Now, how do we use them to our best ability? And I think that that's what's really important. And that's really what I love about what I do. I get to meet with people and sit down and break apart that vulnerability, release that trauma around money, and learn more about where to take ourselves in the future. That's it.
Yeah, let's double click on that one. I'd love to hear you talk a little bit more about small business and what are some of the biggest challenges you guys are seeing?
Yeah. Small business is very important because I feel like now more than ever, motivation is not lacking. Half of everybody that I meet is a business owner to some capacity. And now you're able to really run a business, create a business from your phone. From beginning to end. And there's people, especially the youth, who are really maximizing this. They are grabbing their phones, they are starting businesses, they are getting familiar with these applications. I mentioned my cousins earlier before Thanksgiving. They're trading, they're 18 years old, and they're making money. And this is only happening because they're taking time to learn these systems and they're really educating themselves. So with business owners, it's no different, right? Business is changing. And I think that the most important thing now is really just understanding how the systems can work in our favor. So what I'm seeing more now than ever is that motivation, that drive that we have as a nation is also transforming into a need for education. There's kind of no shame with my business clients. As far as questions. As a matter of fact, a lot of my coaching sessions, when we first meet, they have a whole list of questions for me. So I feel like the need for information is something that we all now understand is necessary. And especially in business, I don't see entrepreneurs necessarily shunning away from these programs because they see the true benefit of working with somebody who has their best interest, somebody who is I'm genuinely driven by the success of all of us in here. I feel good if you all feel good, and if you all feel good, I feel great. So that, I think, is what is really good. Creating an environment where we are going to continue to be motivated, we are going to continue to grow, and how do we work together to really expand that? And I think that being inside of Wells Fargo offices, too, is so important because I think that there's a loss of before, you could go into a bank and somebody perhaps knew you and they knew your whole relationship and they can assist you with everything. But now, because there's so many automated systems, there's so many fintech apps that are available, and there's so many additional resources, the client and the consumer has to really be savvy about what they're doing. And I feel like me being in the office and all of the coaches being in the office is an amazing tool, not only for the clients, but also for the teams. I feel like now, more than ever, the banks that I'm in, the Wells Fargo's offices that I'm in, they're driven to help their clients succeed as well and connecting us with them there. So it's kind of like a return back to I can go back into a Wells Fargo office and somebody there can actually help me with the whole thing and not necessarily sell you on anything because I'm literally there just to learn with you, to teach you, to give you any insight that I have as an entrepreneur, as a professional, and as somebody who's been in the financial industry for a decade. So I think that all of those things are changing, and I'm very excited to be in the office because I feel like that's kind of what's missing, a human touch.
And if I could just double click on that too, I think Ray in this program is really a testament to part of that future proofing of financial health, of threading the needle between virtual experiences and relationship banking and in-person experiences, which still really matter. I think about like when my father passed 2 years ago, and we were trying to figure out my mom's finances and get everything in order. I didn't want to talk to an app or text with somebody. I wanted like in person someone to sort that out for me. And I think we still have to kind of figure out, our end-to-end digital experience needs to be in Spanish, which Wells Fargo's now is, but also that in-person skilled advisor needs to speak Spanish with you and guide you through that experience if you're Hispanic. So it's tough.
No, that's good. And I'm glad that you all kind of piggybacked on that because, again, I wanted to hear both perspectives in terms of how we're managing this partial customer that's out there. So that's super helpful. Let's start now thinking about the future. And so if we think about research and what that looks like, I want to come to you, Taylor. And one of the things that, we've all, I think I look at a lot of the professionals in this room who do this work for a living and in community is so much is changing, right? Macro level, demographics are changing, the proliferation of AI and all the tools that come with it. How do you see research in the future and trying to predict the future as it relates to that?
Yeah, it's a really great question. It's a question I'm really, really actually quite passionate about, as you can imagine. I'm a researcher, by training and by heart. But you're absolutely right. I mean, we have to acknowledge that we are all facing an extraordinary and profound amount of uncertainty. At the same time, I sometimes wonder if the invocation of uncertainty can sometimes serve as an excuse for inaction, right? Yes, we all face and are aware of the volatile economic conditions, right, that this country and the world are going through. We're aware of accelerating technology. We're aware of the major macro risks that technology and other changes may face. We're aware of the unpredictable policy environment. We're aware of a really divisive and noisy information ecosystem, right, that you were referring to, Raymond. But for all these reasons, and many, many more, I think actionable research and trustworthy data become even more important. Why is that? I think good data gives us visibility into how people are actually navigating all of those changes and risks, right? I think financial services, I think it's fair to say, is going to be entangled with all of those major changes, right? AI, climate risk, labor market shifts, housing market shifts, the reinvention of what it means to be creditworthy, the transformation of wealth building, right, and the emphasis on entrepreneurship and the democratization of capital markets. All of those things implicate financial services and financial inclusion, financial health, really directly. I think to prepare for that world, we need to understand how consumers are managing their finances today. What are they prioritizing? Where are they compromising? What trade-offs are they making? How are they sequencing their decisions? All of those things. So just to give you a couple of examples, I think good data will help us future-proof resilience by helping us measure people's true vulnerability and giving us some early warning signals about where and how to invest in people's capacity, not just to respond to crisis, but to prepare for and navigate those crises. I think good data also will help us future-proof trust in financial services by grounding our decisions, our products, our service delivery, our coaching, our messaging in the real experiences of communities. Bankers know better than anyone, right, that trust is the foundation of financial services and financial health, and trust is built strongest when institutions demonstrate that they understand people and can design with them, not just for them. So, I think data, good trustworthy data is a public good. It's like infrastructure, right? It doesn't belong to any one of us, really, but it undergirds the decisions of all of us. And with good data, right, like markets become fairer, policy becomes smarter, innovation is safer and more powerful, all of those things. And when the infrastructure erodes, right, we see the whole ecosystem become more vulnerable to blind spots and unintended harm. So research, I think, plays a really critical role in helping us navigate that uncertainty, to take action despite change and uncertainty.
So I'm gonna come to Nadia. So Nadia, from a bank perspective, and what would you and your peers in here, like, how would you use that data? How would you ask the folks out here to use that data?
Yeah, I mean, I don't know about you guys, but I'm not allowed to do anything at work without a bunch of data to back up why we should be doing it. So, so we need the data. I think one of the challenges we also have is, like, you can see data over and over again about, and we've almost become numb to it, desensitized to it, about how many people are financially struggling in the US or how many people don't have access to mainstream credit. But sometimes the difference maker is getting, a key stakeholder, a key leader in front of a person, like we do sometimes at our client testimonial types of events, where that person is saying, I am a single mom, I have 2 kids, I've had cancer 3 times. There are factors outside of my control that I am financially struggling, and that just brings it home in a different way. So I think in some ways, especially with the rise of AI and all the data, like, we have all the data we need sometimes to tell you over and over again, people are struggling, they need better solutions. But sometimes it's those qualitative stories that can really bring it home, and figuring out how we tell both sides. Again, in a media-heavy environment, I think is kind of the challenge in front of all of us.
Can I just jump in real quick to just underscore something that, Nadia, you said? We don't really need more data. What we really need are insights that help us bridge data and action, right? What we really need is to understand not just how many people are financially vulnerable or financially struggling. We need to know why, right? Specifically, particular groups, particular individuals are financially struggling, so that we can orient our action and our interventions to those reasons.
Sure. Yeah. And I mean, we as financial institutions can't focus on, the 20% of affluent, emerging affluent customers. We have to bring in everybody else for us to survive. And I think, again, the data helps us make that case, figure that story out, and make it profitable, candidly.
Perfect. So now we're gonna I want to ask you one question, and then I see a couple of hands. I'm making eye contact with people, and they've got questions. So we're gonna jump to that. What's one actionable idea that we can future-proof this work on? So we'll start with you, Raymond.
It's always going to come back to the why for me. Like you said, the data exists, but it's the why. Understanding clients' needs is probably the most important thing as we move forward. And future-proofing to me means demystifying these systems and creating an environment where people feel confident and empowered to do what they're driven to do. Be it your personal finances or as an entrepreneur. And I think that getting ahead of a crisis is what's important. And right now, I don't think that we're there. And I feel like it's important that we're having even an event like this one where the focus truly is on preparation. And yeah, I think that what we're doing now is exactly it. And I'm glad to be a part of it. And I love to be somebody who gets to actually speak with the public and gets to really feel what the hesitation is. And often it's really just a lack of information. Yeah.
Taylor.
So I think the most actionable step we can take to future-proof financial health is to build responsible systems, common guardrails that can ensure that innovation actually serves everyday people. So the Financial Health Network right now is embarking on a new initiative to build and launch FinHealth standards for the financial services industry. We think that offers one pathway to build those responsible systems. So these standards give providers a blueprint for designing products that reduce volatility, help people manage their cash flow, strengthen long-term financial health outcomes. And we do have a way to go here. For example, we recently conducted a review of 20 widely available checking accounts, and we found that only 4 of those checking accounts met even half of our financial health spend standards, right? So that's a clear signal that included, right, doesn't necessarily mean well served. But I think that those standards show a way forward, right? Through these standards, we really try to translate that complex and fragmented financial services ecosystem into something that institutions can actually act on. Because in that fragmented ecosystem, standards can help ensure that no matter where people bank, borrow, pay, or get paid, that their experience supports and doesn't undermine their financial health. So future-proofing financial health, I think we have to adapt to this new financial services ecosystem with an understanding that people are banking all over the place and that they may have information, but they need insight and expertise to take action on that information. And ultimately, we need to design these responsible systems in ways that support people's capacity to choose, to grow, to thrive. I think ultimately future-proofing financial health is about supporting people's financial freedom, freedom from want, freedom from fear, freedom to pursue the opportunities and build the lives that they want, even as the world around us changes.
Did you all catch that gem he dropped about inclusion doesn't mean well served? That was good. That was good. Nadia.
So I was going to try to say something smart about AI, but I think I'm going to pivot. And I think that, so one thing just as kind of a tangible, smaller thing, I've been thinking a lot about rewards at work and incentives and how for a lot of products and financial solutions, we have rewards for spending, like credit card rewards. But we don't have that for savings. We don't have that for meeting with a financial coach. We don't have that for making sure you have insurance and it's kind of the right insurance plan for you and whatnot. And so if there was a way and ways that we could introduce more rewards and incentives into our product design, that's what I'm thinking about. And use AI.
That's right.
Responsibly.
That's right, responsibly.
Inclusively and responsibly.
So now we're going to open it up to the audience. And so I've seen a couple hands coming up. So I'm going to be the mic runner. You're on deck. You're up now.
Great. Mandy Eidson from Self-Help Credit Union. Thank you for the work you do. I want to ask a question I was asked recently, which is like, what is the number one thing that keeps you up at night when you think about our more vulnerable residents?
I think about fraud. I worry about fraud, and that's what I think about.
Yeah, I was thinking scams relatedly. But I'll put a little bit of a spin on that. I mean, I think when we often talk about frauds and scams, we often think through a lens of criminal justice, which is really important. There's no doubt that there's a criminal element to the phone calls that you got earlier today trying to get you to pay highway tolls, the phone calls that I got earlier today trying to get me to engage in some kind of tax relief, something or other. But I think that ultimately one of the reasons why we are increasingly vulnerable to frauds and scams is that even our legitimate systems and institutions are often designed in ways that feel really scammy to consumers who are using them.
That's fair.
So that's what keeps me up at night is kind of good institution building and, again, building responsible systems that don't feel scammy or fraudulent.
And for me, I would say that it's the speed in which this is all changing. I feel like there is groups of people who are keeping up, and I fear for the groups of people who are reluctant to participate, especially in such a transformative place that we are now. Last night in the ballroom, they talked about cryptocurrency and the importance of that, right? We don't know what the future looks like because it's constantly evolving, and I think that it's very important for us to all remain engaged with the systems that are in place. And I feel like that's what keeps me up, that there's populations that just kind of like shy away from it completely. And banking 5 years ago was different, banking 10 years ago was different, banking 15 years ago was different. And it's like, and I use those examples because it changes very quickly. And if you're not keeping up, you may be left behind. And that's terrifying to me when I think about it.
And if I could add to that, we have one of our amazing coaches from Las Vegas here, Alex, and I was in Vegas a couple weeks ago talking to some of our community members there, and they were saying they've seen such a decline in coaching and some of the community service programs because of our current immigration policy, and just like seeing how the exclusion it perpetuates too is something that's, you know, to your point, people get left behind. That really scares me too.
Great insights, guys. Raymond, you mentioned something about your nephew, 15, 18, making a lot of money.
Yes.
How are you all thinking about your products in the spirit of being proactive versus reactive, so in my interpretation, in the sense that you're catering to younger generation of customers, clients who are earning money, and you're also factoring in the digital maturity of older clients who, or maybe non-older clients, but non-digital savvy, who are thinking about, who want to be included as well. How are you thinking about partnerships? Are you partnering with schools, high schools, universities, to ensure that this education is inculcated into the curriculum? And from a digital perspective, how are you navigating the landscape to make sure they're included? Thank you.
I think that's a question for you, Nadia.
I think so.
I mean, in all kinds of ways. I think in terms of a product suite, it's in part about having kind of a spectrum. So for example, with some of our investment solutions, we have Intuitive Investor where you can kind of do it on your own. We also have something kind of in the middle, and then you can meet with a wealth and investment advisor as well. We also have a range of partnerships to bring kids in early to educate them. So for example, in New York City, we just completed a partnership with Goalsetter, a fintech that was providing financial education to kids in New York City public schools. With the Operation Hope partnership, we work closely with some of our community relations leaders in different markets to show up at HBCU events and other college events. So I think we're very much conscious of that range of ages and the different needs and kind of moments that matter in your life when you need help or advice or a product or a solution. But we always have more to learn. So if you have any great ideas, please grab me up.
I do think that life cycle lens is really, really important. And I think that increasingly we're focused on two moments in the life cycle. One is childhood and early adulthood, and the other is late adulthood. And I think why are we interested in those two? I mean, there's obviously people have to manage their money well throughout their life, but those two moments are incredibly important because of the implications that they hold for people's independence, right? Like those are the moments in which you're navigating, often with other people, your autonomy as a person via conversations, sometimes conflicts over money. So I do think that those are two really important life cycle moments to focus on.
I agree. I feel like across the board, I think it's really just about information. Earlier I mentioned that because of this partnership, clients can now go into a Wells Fargo and get dedicated assistance. And I feel like this is an example of how we make it available or how we make it accessible so that you don't feel like you're being left behind or you don't feel like maybe it's something that you can't understand or use. Information is very important, and all of the new technology, in my opinion, is relatively easy to understand. Interfaces are easy to understand, settings are easy to understand. It's really just, I think, the volume that can get overwhelming. The need for multiple applications, the need for understanding how they work with each other. Why do I need them? But again, it's always going to boil down to the information. And I feel like that's what's so important about the work that we do, that what we are doing is demystifying all of this. We're taking away the question mark. We're taking away the haziness around these topics. And what I see particularly in the youth is that they're fearless because they haven't been told to be scared. And the reason that I go spend Thanksgiving with my cousins that are at this age range is because I need that. I need to see it firsthand. I need to be reminded that I too am fearless. And everybody in this room is fearless. The fact that everybody showed up here, registered their badge, we're walking around with our businesses and stuff, like we want more for ourselves. And yeah, I think that that's the biggest difference. What I see with the younger generation is that there's lack of concern for old stigmas around money. They're just going to invest because they can, and they absolutely can.
You're up next, and then I'm coming to you.
Hi, this has been really great. My name is Manda Brevu. I'm the founder of a company called Kuleta, where we're building a platform trying to teach women vendors in Kenya how to sell their products online on our e-commerce marketplace. And so I wanted just to speak a little bit more about financial inclusion beyond the US. And so by 2030, for example, around 42% of the world's youth will be in the continent of Africa. And so I'm curious what your strategies are in terms of like engaging with those kinds of partnerships beyond the US, like into underserved markets.
Well, thank you for your question, and congratulations on founding your company. That's wonderful. So, Wells Fargo does not serve clients outside of the U.S. from our consumer bank, but we have been actively listening to and learning from international financial inclusion work. So, for example, Queen Maxima of the Netherlands is now at the UN and leading a financial inclusion initiative for the United Nations, and we've held a couple meetings with senior leaders to talk about our financial inclusion work, our financial health work, and learn what she's seen globally. And I will say, one of the things that we take away is that in a lot of these emerging economies, like Kenya, where there historically was maybe less of a strong banking system as in the US, that has given rise to these amazing innovators and digital solutions and fintechs and whatnot that we have a lot to learn from and, kind of admire and learn from afar. I don't know. I know Operation Hope is...
I mean, obviously, like she mentioned, we are not serving clients outside of the United States at this time, but what I'm seeing firsthand is that there is a lot of clients who I meet with who are either first generation Americans, or maybe they're not born here. And I feel like a lot of times people who are coming to the United States, they're a little bit more receptive to understanding this new data or understanding the systems in place here. I think what you're doing is admirable. I love any business that can support a large community who would not be ready to do exactly what you're doing, right? And I think that the most important thing is really just, again, the information and creating a space where people feel safe to go to, regardless of where you come from, understanding that Wells Fargo is a strong bank with a long history of success in America and with a lot of resources that are available to them, including just information around business and financial concepts.
Hi, I'm Lynn McCrae. I'm the COO of Eco Sneakers LLC. And what we do is we are sneaker sustainability. Basically, we repurpose sneakers all over the country and in 14 different countries as well. But one of the pieces that we kind of on the way to sneaker recycling, we also found out that kids love sneakers, right? So why not teach them financial literacy around sneakers? So we're doing that. And luckily in July, we were celebrated by Operation Hope for our financial literacy program at the New York NASDAQ. So the question that I have for you is, I've seen in some cities and states that they are actually requiring financial literacy for graduation for young people. And I'm seeing too that those young people are teaching their families, and there's like a kind of an acceleration for that information to be imparted to families. And so what I want to know is, I know that's in some cities and states, but is it something like a push for the financial organizations to kind of move that in every city and state? Because I think it's important. So that's the question.
Well, I want to know more about your sneakers for my kids, first of all. But absolutely, I know that Operation Hope has their financial literacy for all partnership. That, as I understand it, did do a lot of advocacy for more financial education in schools. I don't know if anyone in the room is from that side of the house, but absolutely, we're now partnering with Greenlight at Wells Fargo to do financial education for families as a whole. And we often would hear in our working with unbanked, underbanked families that somebody's grandson was helping them navigate the financial system. They were banked, but their grandmother wasn't, and he was helping her figure things out. And so we're thinking about how do we think of this as kind of a household that we need to serve versus a kid and their grandmother separately. So absolutely. I will say what I always wonder about with financial education in schools is how do you tie it to sort of teachable moments? Because it's like one thing for my kids to sit through a class about credit, but they don't really need that until the day they get their first paycheck or the day they go, through their first kind of financial moment that matters. So just figuring out how we tie it to experiences too.
Yeah, I'll just echo that and say, just from a pure research perspective, the efficacy of financial education, the results are really mixed. I think a lot of that has to do with the fact that financial education programming is delivered in a really wide variety of ways, right? And so it's hard to it's comparing apples and oranges, often by evaluating different kinds of financial education programming. So I think we need to know more actually about what actually works in terms of being able to support not just knowledge, but the ability to apply that knowledge in real life. That's what's really important, right? It doesn't matter if you understand what, APR means. If you can't actually go out there and navigate the complex systems that we've been talking about in order to be able to get a loan that you need and then pay it back, all the knowledge in the world isn't going to help you, right? So I do think that we need to understand more about what actually works with financial education. And supporting actually taking action on knowledge. And also I think that financial knowledge and confidence capacity on the individual side is only one half of the equation, right? If that. And Nadia mentioned earlier, so many of the factors that shape people's financial health are well outside their individual control. And so we need to have a systems perspective at the same time that we have this individual perspective in order to really move the needle on what matters. I think we have to ask ourselves, what are we actually trying to achieve here, right? Money is a means. To what end? Knowledge is a means. To what end? And so we need to ask those kinds of questions at the same time that we're really, continuing to support the really good work that schools and coaches and educators are doing across the country to build that knowledge base.
And one thing I'll just add to that, and I know we've got several of the peers area in here. I see cities in the house. I see First Horizons in the house. We get convened to Washington, right? We're asked to go FDIC, Treasury, and other groups. And we have an opportunity and an obligation, right, to be able to talk about how important it is for them to institute this as law and, do it state by state, have a federal mandate on it and so forth. And so just want you to know it's not only just financial institutions, but I think we have a responsibility when we do get convened to Washington to be able to take that message and show the value of it.
There are 30 states today that have financial education as a requirement for graduation. So that number is growing.
And it will grow. I expect it to grow.
Thank you, Michelle.
Thank you all so much for being here. My name is Trisha Todman. I'm with Airbnb, and I am curious about Wells Fargo's approach, the financial wellness coach, as well as the data perspective on the relationship of financial health to home ownership. And, what does the data say, especially I think there was a statistic yesterday from a gentleman from Zillow about home purchases going down, from 6 million to 4 million, which is a pretty big drop. So just curious to hear what you all have to say about that.
I'll start and then you pick it up when I drop the ball. We do know that homeowners are financially healthy. Our own research at the Financial Health Network shows that statistically speaking, homeowners are more financially healthy, more likely to be financially healthy than non-homeowners. There's still a lot of variety there. So I think supporting access to homeownership can be a really critical lever to supporting household financial health today, but especially, we all know this, as a pathway to wealth building long term. I would also just caveat that with, with the evolving homeownership landscape and home buying marketplace, I also think that we need to be paying attention to the affordability of homeownership, even for current homeowners. I think that what we're seeing in the insurance marketplace, what we're seeing in terms of property taxes, what we're seeing kind of across the board in terms of the ability to actually leverage that asset to build wealth, you have to have equity in your home in order to be able to do that. And I think what we're seeing is a divergence in the population of homeowners between those who are able to actually leverage that asset to build health and give themselves a buffer to support their financial health, all of those things, and those who simply are not, for a whole variety of reasons. But I think we need to pay attention to both of those, both access to homeownership, the supply side issues that the CEO from Zillow talked about yesterday, I think are incredibly important, but also, what are we doing for current homeowners so that they can actually leverage that asset effectively?
Yeah, I mean, I think sort of on that point of affordability for existing homeowners, our mortgage products now have to think about more wraparound services to address the affordability once you become that homeowner. So maybe it is that education around flood insurance when before you never realized you lived in a flood zone because it wasn't a flood zone 10 years ago. I think also though, first and foremost, we have to listen to our consumers, and increasingly, it's not as much a goal and ambition to own a home because that's so out of reach, and and that's tragic, and we have to all tackle that as a society. But if people are more focused on just being able to make rent, can we have some kind of rent splitting product? Can we have some kind of savings pocket in their deposit account when they get their paycheck to support those unexpected things that come up? The goals are changing. We see.
I think that's such a good point. The average age for a first-time home buyer is, 39, 40?
I don't know.
It is. I'm not making that statistic. It's either 39 or 40. So, I think we do have to recognize that wealth building needs to start before you're able to buy your first home at the age of 40, right? And again, I would just say, what ultimately is our goal, right? The goal of owning a home, that's a dream for many, many, many people still in this country. But why? One, it's about shelter. Two, it's about being able to have that asset in your back pocket should you need it. Three, it's about wealth building for not just you, but for your family and your future generations, right? So I think that one way to sort of reposition this question about access to homeownership is to think, what are people actually trying to achieve through the vehicle of homeownership?
And I just want to add one thing too. I also think it's about wealth preservation. One thing that gets lost when we talk about the wealth gap is that people had wealth and they lost it because they weren't protected in that homeownership journey to pass it on to the next generation. So how do we also support people in passing things on to their family members and protecting that wealth journey?
Wills and trusts and heirs property and all of those things are really important.
All right. This will have to be the last question. Well, actually, that had to be the last question.
Oh, no.
It's all good things. Time comes to an end. I want to thank the panelists. Give them a hand.
Thank you.
Give yourselves a hand.